So I'm really pleased to invite Ms. Sugandhi Matta, Chief Impact Officer at ABC Impact, as the moderator for the panel discussion. Joining her on the panel are three other members, Mr. Florian Kohler, who has previously served as the Managing Director at OVM, leading their PE portfolio in Asia. He's presently building his new fintech platform focused on alternative asset classes. We also have Ms. Nina Freudenberg, Director Investments at Golding Capital Partners, and Mr. Suken Shah, Principal Neev Fund. So with that very, very exciting lineup, let's get started. Sugandhi, request you to take the discussion ahead.
Thanks, Divya. Good afternoon, everyone. It's a great pleasure to be here at the launch of the 2022 report by the Indian Impact Investors Council. I have the opportunity to moderate a conversation which I hope will be interesting and thought-provoking for everyone, with three panelists who bring very interesting and different perspectives to the Indian impact investing market. We've seen the retrospect, but as Divya mentioned, what does the future hold, and what can we do to kind of, turbocharge and direct capital where it is most needed from an LP and a GP perspective. So on the panel, we're fortunate to have Florian and Nina giving both an international and an LP perspective, and then Suken, who's giving a GP and, a particularly climate-focused perspective. So I won't take too much time and really just start diving into the questions. Before I do that, maybe just a minute to introduce myself. As Divya said, I'm Sugandhi. I'm the Chief Impact Officer for ABC Impact. We're a Singapore-based and Asia-focused impact fund. We've invested in 11 companies, of which 3 are in India. And I myself have been investing in impact in India for more than a decade now. I'll kick off the first question to Nina. Nina, I think, it would be great for everyone to hear how are you at Golding seeing the sort of the international impact investing market develop, and where are sort of LPs looking for opportunities, particularly with a reference to India. So over to you.
Thank you. Thank you for having me, and good to see some familiar faces again. Maybe as a quick way of background, so now I'm a director at Golding Capital Partners in the impact investing team. Before joining Golding 2 years ago, I was part of Sonans. Sonans was a small impact fund of fund purely focused on emerging markets that was run by my colleague Andreas Nielsen and myself. We built a small fund to invest in emerging markets in various impact themes, and about 2 years ago, Golding Capital Partners, which is an asset manager based in Munich, took us over. So Golding has been around for a bit more than 2 decades and runs various fund of fund programs within private equity buyout, infrastructure, private debt, and has a primary focus on Europe and North America. And now the intention is to build a new pillar on impact. So that's what we are doing at the moment. We are still in fundraising of our first fund, had a first closing last summer and started to make the first commitments. The strategy builds on our experience from Sonans, but we developed it a bit further based on what we saw on the market and what happened in the past years. So the strategy now is global. So we focus on emerging markets, but also Europe and North America. And we have a rather strong focus on environmental themes. So the 3 pillars that we cover is green solutions. So that would be anything related to energy transition, circular economy, sustainable mobility. And then the second one is sustainable food and agriculture. So, technologies that we need here in Europe and North America, but also for the smallholder farmer setting in emerging markets. So the first two pillars have a global focus, and as a third pillar we have financial inclusion, and here we have an exclusive emerging market focus. And obviously India remains a key market for our strategy. So as a fund of fund, we can wish for many things, but we have to work with what's out there and the fund landscape. And since I started to work in the impact investing space in 2014. That, you know, most of you will know there's obviously a big shift towards environmental themes, and in particular in Europe and North America. And so that's one thing that we adjusted for in our strategy. The other thing is that to date, we focused a lot on venture capital and also growth private equity funds, because that's where we saw the new technology and also the business model innovation. What we added now is also buyout strategies, in particular in Europe and North America. We saw a growing deal flow of very large, mature companies that have a pure focus on sustainable technologies and that are now interesting for buyout funds, and that's why we also saw a growing number of buyout funds out there. Obviously, there are some more, let's call them generic impact buyout funds that cover many different impact themes, but there are also some that have a pure focus on environmental topics. And what I thought is particularly interesting as well is that there are more and more funds that invest generically, but that have the idea to support companies to stay on the Paris path, so to be aligned with the Paris Agreement and to verify that with the Science Based Targets Initiative. And I thought that's really interesting because that's where buyout funds can add real value and where, again, impact and financial return can go hand in hand, because the idea is that when you support companies to invest early on in the transition towards a lower footprint, then you can be able to achieve a higher multiple at exit. Or even the other way around, if you don't invest early on, you might have a hot potato that nobody wants anymore. So yeah, that's the strategy. We have a pretty conservative investor base, I must say. Golding is very strong in the German market. We have a bit more than 200 German institutional investors, so pension funds, insurance companies, but also saving banks. And for them, the topic impact is new, emerging markets is new. So we are trying to push the boundaries here. And we started with a strategy where we thought that it makes sense from an investment point of view. I must say there are a couple of things that we now 1 year into fundraising are currently changing. The one thing is SFDR. I don't know, some of you might have heard of this. This is the new sustainability regulation from the European Union. And we had the clear feedback from investors that this is super important. So we were Article 8 for those of you who are familiar with the articles, but are now assessing if we can upgrade to Article 9, which means that all of our portfolio funds have to be Article 9 as well. Or we have to do some sort of shadow reporting, which is also quite complicated. So that's one thing. The other thing, unfortunately, that we got as a feedback is that emerging markets is still a bit too exciting for our investors. So we started with a 50-50 strategy, so 50% emerging markets, 50% Europe and North America, and are now scaling that down to 25% emerging markets. This is not because our investment team doesn't believe in the case of emerging markets, in particular India. They're very keen on Indian investments, but it is just the feedback that we got from sales. And here again, we are trying to work on this over time, but for now, we had to reduce the emerging market allocation a bit. But definitely India, will remain a key country in the coming years, and planning to make more fund commitments this year as well.
Fantastic. Thanks for that, Nina. I think decarbonization, environment, a big theme that I'm sure we're going to dig deeper into, and then impact reporting and SFDR and what that means for emerging market GPs is I'm sure something that people will have a lot of thoughts and questions on. So just to move on to Florian, would be great to hear from your experience at OPM how you feel the impact investing market in India has evolved, and where do you see it comparing to other geographies in terms of both potential and also view on performance over the last decade.
Yeah, no, thank you very much. I mean, for those of the audience who don't know OBM, so OBM was up until recently the investment manager for the Swiss Development Finance Institution. So we had Manaj from BI on give a keynote earlier, CFEM, which was the Swiss equivalent, which is much smaller. So that's where I worked at for several years, and I was the managing director and on the internal investment committee and responsible for their Asia allocation. Now, what we did over my tenure, we allocated close to probably $1 billion into impact funds, so solely in emerging markets. We were just a pure play fund of funds, similar to what Nina was mentioning. We invest in funds, and we invested across Africa, Latin America, parts of Central Eastern Europe. But by far our largest exposure, or close to our largest exposure, was really in Asia. And when we talk about Asia, that's really India. Obviously, we've done a bit in Southeast Asia. But India was probably our single largest country exposure for many, many years, and the reason for that is the depth of the pool of fund managers and impact investors in India. So when we're at OBM, when I started back in 2005, there are probably a handful of players, but in India is one of the few markets where you can find asset managers who sincerely care about impact and have been deploying capital for 20 years. You can look at groups like Avishkar, you can look at groups like Ventures, you can look at groups like, Omnivore, maybe not 20 years old, but, and then Law Capital, which is 20 years old. So you have a lot of deep experience impact allocators or asset managers in India, which you don't really find in a lot of other markets. In Africa, you're asking about just kind of what we saw in terms of returns and deployment. In Africa, it's probably the next closest market, but that's very fragmented, right? You have Southern Africa, South Africa, which is a little bit more mature than Sub-Saharan Africa, and you have some good impact managers, but it's the African economy and the Indian economy, I don't have the data recently, are quite similar, but Africa, you're talking about 60, 70 countries, right? Well, India, it's one. So you have this pool and this concentration of knowledge and experience in India, which you don't have in other markets. Now, the challenge that I think the impact industry is going to have in India is the return question, right? A lot of capital has been poured into Indian private equity and fund managers the last 15 plus years. And it's taken a long time to come back. And this is not just an India problem, to be fair. This is impact industry globally. We've seen that in Sub-Saharan Africa. We see that in Latin America. Now, where India has the advantage is that I feel there's a deeper level of sophistication in terms of not only the impact managers, which we talked about, but the entrepreneurs who they're invested in. And I saw IAC in the report before, they were talking a lot about where the capital has gone into climate tech, financial inclusion, and that speaks very highly and positively towards the quality of the entrepreneurship you find in India. So you can actually deploy that capital. But the challenge I feel that you're going to come across is there's still a lot of dry powder with a lot of these funds who raised capital in the last 3-4 years. There's a lot of money. There's hundreds of millions of dollars that has been raised recently. If not billions, I don't have the exact number in front of me, that still hasn't been deployed towards investment opportunities in India. And there are good reasons why that has not been deployed, right? The impact managers are looking for a certain quality, a certain level of professionalism in the entrepreneurship and the investment opportunity. So I think what my gut view is, I think 2023, 2024 is going to be probably a difficult year for new impact managers to raise capital because of these two issues. There's already a big pool of dry capital that's dry powder that's staying with existing managers. And then a lot of capital from previous funds, is just starting to come back in the last couple of years. And institutional investors outside of, Asia want to see proof that money's coming back, and I think Nina alluded to that. There's still this view that emerging markets are a little bit probably too hot or a little bit too volatile, considering what's going on around the rest of the world. I don't know if that helps kind of put everything into context.
No, that's super helpful. And I think, as we're talking about last decade, future decade, I think the other thing that happens as you mature as a market is that now people are looking at track record, right? Previously, it's just about potential SDG financing gap, but now as the industry matures, these are some of the tough questions that, we all have to get our heads around. So that's super helpful. I think one of the things that, that comes to my mind, and we can talk about it when we have more Q&A, is how, what advice we can give people around positioning, given these challenges around people already having a lot of capital allocated to existing managers, money not having come back, and this huge interest in climate, that mean also an environment, actually, what are the opportunities in these tough environments? What kind of fund managers, what kind of strategies are most likely to be funded? So, we'll dig deeper into that. Suken, I think, you've had great success with Neev 1 and with Neev 2. I think it would be great to hear, how you've thought about the investment and the impact strategy for this, and where you've seen the most resonance with LPs as you've been fundraising, and then most opportunities in the market from a deployment perspective. So it would be great to hear from you.
Firstly, thank you for having me here on this panel. Glad to be here. Just to give you a brief introduction about Neev. Neev, by its name, Neev in Hindi means foundation. The idea of setting up Neev was to lay foundation for newer sectors, newer industries, where in difficult geographies, where typically, we would not get enough private capital attracted. And as we scale up businesses, then we have more and more private capital attracted towards those sectors and businesses. So it started in 2015 as a government-to-government initiative between Government of UK and Government of India, inaugurated by the then PM, Mr. David Cameron and Mr. Modi. At that time, we had a specific mandate to invest across climate, environment, agriculture, and social infrastructure sectors. About 70% of the capital we deployed from Fund 1, which was about $60 million in climate and environment space. Apart from that, we also did investments in agri, in cold chain, in agri silos, logistics, circular economy, and biomass. What we saw is, after us coming in, given the kind of quality of investors we have, and given our parentage of State Bank of India, we've actually worked very closely with some of these companies to build out those sectors by, playing a lot of role in policy intervention. And that actually has led to creation of such businesses. And subsequently, we seen likes of, a Mitsui, a Shell, a Nomura, a BII, USDFC, IFU kind of investors then backing our portfolio companies. So we've taken those early stage risks to create and develop those businesses, and then there is proof of private capital coming in. On back of that, what we did is we targeted to raise Neev 2, again of a similar size, but we got tremendously good response from global investors. So we went on obviously doubling down from Government of UK. Then we have commitment from the European Union through EIB. Then we've got JICA, the Japanese institution, and we've got a couple of sovereign investors from India. So with this, we already about $150 million against a target of $60 million, and we're targeting to close our fund at around or $200 million to $50 million size. And what we've again done is do the same thing, focus primarily in climate and environment sectors. We've taken bets in green hydrogen by people. There are very large sort of businesses being talked about of billions of dollars. Here we, with pride, we say we've actually entered into a $3 million contract with one of the leading steel players in the country, and executing real projects on ground. So this is what Neev has been doing, and that's how we see climate and environment as a sector as playing out. Yeah.
Super. No, thanks for that. I think one of the things that would be great to hear a little bit from you, I think you alluded to that, is kind of the market making and the policy intervention, right? Can you maybe just give us an example what I'm trying to understand, and what I think would be helpful for the audience to understand is slightly parallel to the microfinance evolution initially that happened, right? Which was about creating a sector, building the regulations, sort of getting the whole ecosystem up and running. And are we seeing that in climate, and how are people like you playing a role in that?
Sure. So one of the companies which we worked very closely is into the biomass supply chain industry. When we invested about 6 years back, it was a touch me not sector. Okay. And we were the ones who realized that biomass, if there is a problem to be solved, is about the supply chain rather than the investment piece. So here is a company which actually aggregates all the agri residue from more than 1,000 village level entrepreneurs and converts that into briquettes and pallets, which is fed into boilers for steam and other activities. Now, when we invested, there were a lot of challenges in the sector. It was not even recognized as a sector or an industry in India, and therefore, if you're not recognized as an industry in India, you're not even allowed to purchase industrial land. So we had represented to the Ministry of MNRE, New and Renewable Energy, and we said here is a target which India as a country has for its climate goals. There is a company who is doing this business, and there are enough and more people trying to make a difference. Can we categorize this as an industry? And it got classified as an infrastructure sector. What led this into is they could purchase critical land pieces in industrial areas to provide solutions to their clients. The cost of financing was high teens. Earlier got financed at lower single digits, and that's the kind of difference we've made. Now, this is one example. There are enough and more within the portfolio. Similarly, you've got an agri silo company which basically stores food grains which otherwise are stored in open warehouses. Here we are solving a food security problem for the country. But when we started, investing, the company had just one project, and the authority, which is Government of India's authority known as Food Corporation of India, had the best of the intent, had the best of the abilities in terms of distribution of food grains, but limited in capacity to develop infrastructure projects. So we actually worked alongside them to how do we go about drafting the concession agreement so that the projects become bankable and subsequently we can attract future capital in the country. We also, created an industry association to voice it rightly as an industry overall. Now, what both these things led to, in the biomass company, after us coming, we saw Shell and Mitsui coming in as investors in these companies. So there was an industry which was not there, now has got a recognition, and you're attracting private capital. So a lot of mobilization happening there. Similarly, in the agri silo business, we have IFU, which is Danish leading institution, which backed us, and then now we are seeing very, very big investors, sovereign kind of investors, actually looking at some of these opportunities. That's the kind of role that we play.
No, thanks. That's I think that gives good color to people trying to understand how to make some of these investments happen and scale. I think, Nina, just coming to you, you mentioned in your initial introduction, how climate and environmental themes are finding resonance with your clients, and maybe it would be really helpful, I think, for the audience, if you could spend a little bit of time sort of digging slightly deeper into, what subsectors or what strategies, particularly in climate impact fund managers, that you're seeing, and any sort of guidance or advice you have for people thinking about setting sort of climate impact vehicles.
Yes, sure. So actually, I'm not quite sure if I can speak a lot about the Indian market on that. So so far, many of the investments that or fund commitments that we have done in India did not only have a environmental, primarily an environmental focus. Obviously, we have a pure environmental focus in Europe and North America, but I guess that is less relevant here today. So actually, I'm really curious to see what type of business models and technologies will come from India. So last fall, when I attended your conference in Delhi, I met many funds that are now raising a pure environmental fund for the first time, or funds that are expanding their strategy to cover new environmental themes. And so it's interesting to listen to Suken as well. And because in the past I had the feeling that it's often about electric mobility and so on, but obviously there's much more to it. So I'm very curious to see what's what deals will be done in the coming years. From our perspective, as I mentioned initially, SFDR is extremely important. So I'm not sure if it's worth for Indian GPs to classify as SFDR. That's I mean, fundraising in Europe is tough. As Florian mentioned, there are prejudices, and when it comes to emerging markets, some of them are valid. Track record often has been a bit slow, but in some cases it's also just there's still probably a picture of India that is maybe a couple of decades old, and for many investors it's just easier to invest in Europe. And there's in many cases what we see is there's no pressure to go, to invest in India, to make the effort, to start to screen the landscape, to travel there. It's not, it's not good news, but that's what I've just seen. Even GPs that have been around for such a long time, that returned several funds, that have showed consistent good track record. What I try to tell them is it's not you, it's not, they didn't do anything wrong. It's just there's no, in many cases there's just no interest to look at India to date, which is a bit of a pity, of course. So probably my recommendation here would be, I saw that in India there are actually very large pools of capital that that are available, and that I feel like they're growing, and it's for Indian GPs, it's probably easier and more promising to spend more time focusing on India and fundraising as well. That wasn't good news.
Some very sobering but very realistic commentary, and I think as a GP who's fundraising, I think people appreciate hearing the actual reality. So thanks for that. I think the flip side, or at least one of the things that maybe IIC can think about taking over, doing some more work around is SFDR, right? Because if it's becoming kind of like a gating item, and it's obviously a pretty complicated and hefty endeavor for even established GPs. Is there anything we can do as an industry to kind of facilitate people to, so if not sign up, but at least be able to present their information in a form that can be digested by people who are expecting to see it in a certain form, right? So that seems like something that we can do to make the journey up the mountain a bit easier, notwithstanding some of the challenges that you highlighted. So thanks for that, Nina.
And obviously there's still the DFIs and a couple of, buckets that are available in India, but in Europe, sorry.
Fair enough. Florian, any sort of, a perspective from you on where you think Indian GPs, or where you think the opportunities are for Indian GPs in climate or overall sector? Would be great to get sort of your words of wisdom and advice too.
Yeah, no, thank you. And honestly, I concur, and I hear what Nina's saying, and I think it's also important that a lot of the GPs in India just remember is, yes, it's not personal, and that they're competing not only with other Indian fund managers, but they're competing with fund managers from Indonesia, from Vietnam, from Singapore, from Europe. So when you talk about like if you're doing fundraising in Europe or North America, your competition is North American, European VCs or GPs. It's not like a personal thing. There's few institutional LPs outside the DFIs that have a fixed bucket for India. They say, okay, we're going to put 20% of our capital in India, and then you can compete with that. You're competing basically against everyone in the world. So one of the my suggestions, I think to the GP, impact investment market is, look, what are some of the strengths that India has? If you want to raise capital from international investors, you need to show and leverage the strengths of these Indian entrepreneurs and these Indian companies that you're going to back. And India has a deep pool of tech focused entrepreneurs and innovations with the IITs and the business schools in India. I mean, that is a key selling point of the quality of the entrepreneurs in India who build solutions that transcend Indian borders, right? And we've seen that, and we've invested in some funds that, in the ag tech space, they're building solutions that can be applied globally, right? And I think that's what the GP market needs to focus on, is say, hey, they're backing entrepreneurs who are building global solutions, not just Indian solutions. And I think if you can articulate that, you'll be able to tap into a pool of LPs and institutional investors who get that, because there's a lot of investors put a lot of money into venture, into tech in Europe and in North America. They understand how technology can transfer across borders, and India is excellent at creating technology-focused companies that transfer those borders. So that's probably one words of wisdom that I see in the market, because now, honestly, 2023 is going to be a really difficult year, and it has nothing to do with India personally. It's just globally what's going on. So you need to stand out, and you need to focus on leveraging the strengths that you see in your local environment. Hope that helps.
Super. No, thanks, Florian. I think Suken would be great to hear. I think you mentioned when we last spoke sort of early examples of deep tech companies that you're seeing in the climate space, and some sort of signs of technology being exported out of India, and that really being the future, right? I think one of the themes that we do see in the emerging markets view is that some of these solutions will come from the emerging markets, right? We are going to have to come up with our own solutions, because one is we can't wait for people to send us the solutions when they feel that they are happy to do that. And secondly, the challenges are unique. I mean, it may be the same challenge, but the different nuances of that challenge and how it should be solved are unique to emerging markets. So, it would be great to hear from you on how you guys are seeing some of these early green shoots of companies coming up with innovative technology that's IP protected and that's actually being exported out of India.
No, I completely agree to Florian in that case. We are seeing a clear surge in terms of the involvement of tech in climate and environment sector. And we see this clearly a difference between Fund 1 and Fund 2. And also the age of the entrepreneurs. Okay? It's actually much younger today, and if people actually believe, the entrepreneurs today, that yes, unicorns can be created in this sector too. Just to give you some examples, one of the companies we've invested in is basically the manufacture retrofit emission control devices, which are basically retrofitted on diesel generators to cut down particulate matter, more than 80%. Now, these are unique solutions, solving India's metropolitan pollution is concerned. At the same time, we're working very closely with the Foreign Ministry of India to actually see how we can take this product abroad. And as we speak, we're already talking to a lot of island nations whose economy actually run on diesel generators. They do not have any other solutions, and at the same time have pollution as a very big problem. So we are talking to Maldives, Mauritius, Sri Lanka, Laos, Vietnam. There are a bunch of countries who are more than willing to look at this technology, and anything which is available alternatively is a multiple of the cost at which we can provide in India. So the cost benefit is also something which India has had a leverage globally in terms of tech as well as in terms of manufacturing in some of the sectors. We clearly believe is something we should capitalize. Similarly, there is another company which we've invested in. They've created Asia's largest bio-CNG project, which converts municipal solid waste into bio-CNG, and it fuels city buses, for cleaner fuel. Now, this technology is now actually going to Latin America. So we've recently signed an MOU with one of the entities in Colombia to set up a similar project out there. We are also, not to say that we don't look at technologies outside. We work very closely with some of the European technology guys, but at the same time, a lot of indigenous technology is being developed in some of the research institutes, and not necessarily the IITs, but there are quite a few research institutes where we're working. So we're doing a lot of feedstock in the country which has not been done yet, and there is enough and more capital available to back some of these solutions, and what we're seeing is the ability to do it at scale, which has just not happened in India ever. So clearly these are some of the things, like even in green hydrogen, whilst we talk of large, very large scale projects, here there are the company which we've invested in is actually providing solutions for commercial industrial clients, and they're not necessarily doing it for merchants. So what they're doing is, can we provide solutions to the glass manufacturers, the food industry, where they need hydrogen? So a unique business model which is off grid, not necessarily on grid, and when you do that, a lot of technology is required, a lot of algorithm you need to code to actually make this a viable proposition. Similarly, there is another company which we're working on alternative technologies to lithium ion batteries, and if this happens, this is going to be one of its kind in the country, where you're working towards national security, right? Because lithium ion is a scarce resource, and if you are able to crack, and this is not just assembly or that kind of technology we talk about, this is fuel cell level innovation that is happening as we speak. So yes, there is a lot of work which is being done across sectors. Same even in agriculture and aquaculture is what we're seeing. A lot of technologies we see which has a potential to scale globally.
Fantastic. No, I think the theme of innovation, the theme of tech that can be scaled in India and abroad is really will be a selling point, right? So, and I, at least if I was going to forecast the next decade, I think we'll see the unicorns in the next decade emerge in India, who will largely be climate tech and innovation focused companies, or at least that's what I think would help turbocharge this space. I've been prompted that we're running out of time, and we do want to give people an opportunity to ask questions. So I'm just going to take a look at the Q&A, and I think one of the questions that has come for Suken, which I will maybe modify a little bit. I think someone has rightfully asked about the returns that your funds have generated. I think would be great for you, and then both for Nina and Florian, to maybe give a little bit of commentary around how you see returns in the impact investing space. What are the typical ranges? Just for people to get a sense of what we're seeing or what the expectation is.
So I think there are different sorts of risk reward opportunities available. What we've seen is even within climate environment, if you are willing to play an infrastructure kind of an asset class within this, there are opportunities available there. If you are willing to take market related risks, technology related risks, those kind of opportunities are also available. And the risk rewards, obviously, depending on the theme of each of these investors, will vary accordingly. And as far as Neev is concerned, Neev, as we speak, we are clearly beating our target returns. I will not get into the specifics of it, but we are clearly ahead of our target returns in that sense.
Thanks. Maybe Florian, as you've seen multiple sectors, how do people think about impact returns? Are they still thinking about sort of 25% and above being top quartile? Is there, just give us your sense.
So, I have these kind of debates with friends just globally. It's very rare to find fund managers who can give cash on cash 25% net IRR. I probably had 3 in my portfolio. Honestly, I think we have to be realistic. Look, I think realistic net IRR returns for LPs, anything above 15%, don't promise it. because you're never going to deliver on it. And sophisticated investors realize that because they look at their existing portfolios. To be honest, it's closer to the high single digits, I think. And in terms of return, that's IRR. In terms of multiple of capital in impact funds, it's rare that we find more than 2x DPI, like cash on cash. Because it's just a fund structure over time and fees, they eat up on those returns. But I think, look, fair enough, two times cash on cash, single digits IRR, a high single digits IRR, if you can get that to investors, you're doing very well. I'm just being realistic with returns.
No, that's great. Thanks. We appreciate some sort of honest guidance. Nina, you want to chip in from your perspective?
Yeah, no, I would totally underwrite what Florian said. It's probably also helpful to not to look at impact as a sector, but to look at the different subsectors. There, sectors like financial inclusion, they have been around for quite some time, and there are a couple of funds that delivered good returns, and a couple of funds where you can actually look at the track record. And then there are a couple of new sectors where it's actually really difficult to say. So it's food and agriculture, for instance. There are not so many funds that have did a lot of deals in that space, and then now the whole new space of climate and environmental themes that is new. And the question is, what do we expect going forward? It probably doesn't make sense to look at the financial services track record to try to build an opinion about what to expect from a green solutions fund. But yeah, I'm quite optimistic because the tailwinds, at least for the environmental themes, are still there, and for emerging markets as well.
Super. I think a question for you, Suken. I think, one of the things that Nina mentioned earlier was about the domestic interest or the domestic funding that's now being made available in India. So I think it would be helpful for the audience to also hear about, the fund of funds that you're managing, SRI, that's government sort of backing, and, what kind of managers are you looking for? Or what kind of themes is that money looking to deploy towards?
The Self-Reliant India Fund is basically entirely sponsored by the government of India, with a size of about $1.2 billion. And what we've done is the idea is to invest a lot in the small and medium enterprises in the country. Whilst a lot of capital is being available to the VC industry, giving capital to the slightly growth stage companies or early growth companies is where we see there is a white space, and a lot more capital required is needs to be channelized there. Also, in terms of sectors, what the government is trying to do is, yes, IT, ITES, and tech is reasonably well served. Can we look at sectors beyond that? Focusing on healthcare, in agriculture, in export teams, manufacturing, creating impact in some of the remotest regions of the country. I think that's where the mandate is from SRI's perspective. Till date, we've committed more than half of the fund till date in about a year and a half to about 40 odd funds spanning across some of the sectors.
Super. No, that's fantastic. I think it's great to see sovereign market participants in addition to DFIs, because really we're not going to be able to meet the funding gap with just.
And just to add, Sugandhi, there, the idea here from government's perspective is to act as a catalyst in the sector, basically back of domestic and sovereign capital. We would expect some of these funds to go and raise global and private capital. That's the idea, to create an ecosystem of LP market in the country where there are actually limited set of people who can cut large checks in the country. I think the intention is very clear to create an ecosystem around. So you'll see a lot more of this. This is just the beginning, as we see.
Fantastic. No, thanks for that. I think we're almost out of time, so I'll take the opportunity to thank the panelists, Nina, Florian, and Suken, and maybe also use the opportunity to give the IIC team some homework for next year, right? Around helping people think about regulation. I think there were a few questions around reporting, which came out in the themes that, you know, how can we help people understand how reporting for LPs has evolved, both from a LP requirement and a regulation sort of compliance perspective. I think it's great to see that India has had a tremendous journey in the last decade, but as we've talked about, you know, we're going to have to maybe retool ourselves to have the same sort of journey for the next decade, and that's going to mean different skill sets, different themes, and different players sort of working together to help some of these companies scale. So I hope you've all found the conversation helpful. Thanks so much to the panelists, and thanks to Ramraj and Divya for inviting us to have this chat. Over to you.